SneakPrice Weekly Market Report, Episode 04, Sneaker Market Crash? What the data actually says. Sneaker reselling is dead. You've probably seen that headline somewhere in the last few months. NPR ran a segment on it. And it's all over sneaker YouTube. Here's the actual number behind it. Only 47% of new releases turn a profit on resale right now, down from 58% in 2020. That part's real. What's not so clear is whether that means the market crashed or whether something else happened. We pulled StockX's own 2026 data to find out. Let's dive in. Welcome back to SneakPrice. Quick disclaimer, everything here is market data and informed opinion, not financial advice. With that out of the way, let's actually look at what's crashed, what hasn't, and where the confusion is coming from. Here's the clearest example of what people mean when they say the market crashed. The lost and found Air Jordan 1 retailed for $180 in 2023. At its peak, it was reselling for $500 to $600. Today, you can find that same shoe for high $200 to $300. That's a real dramatic decline in premium. No argument there. And the economics make it worse than it looks. Two $15 Jordan Retro, after roughly 13% in StockX or GOAT fees plus $15 shipping, needs to sell for around $265 just to break even. Most general release Jordans right now are sitting between $180 and $220. That's not a small margin problem. For a lot of resellers, it's a real loss on every pair. According to StockX's own Current Culture Index, released this January, Mizuno was the single fastest growing sneaker brand on the platform last year. Sales up 121%, driven by the MXR and Wave prophecy smoke. This is not a niche brand anymore. This is where a real chunk of the missing resale demand actually went. Maison Mihara Yasuhiro and the chunky sneaker Wave. Right behind Mizuno at number 2, Maison Mihara Yasuhiro, up 91%, built on deliberately chunky distressed designs that stand out against a market that's mostly gone slim. Asking confirmation that growth is happening, just not where the headlines are looking. Asterisk, Saucony, and Solomon, the performance crossover names we've tracked before. Rounding out the top growth brands, Saucony up 59%, Solomon up 58%. If you've been watching this show, these names aren't new. We flagged Solomon's momentum before, and this confirms it's continuing, not a one-off. Ugh, dicko I. 3-year winner nobody talks about. Since StockX started splitting shoes out from sneakers back in 2022, UGG's has been the #1 best-selling brand in that category every single year, including 2025. It's not flashy and it doesn't get sneaker YouTube attention, but by StockX's own sales numbers, it's been winning quietly the whole time. Nike's wildest stat of the whole report. Here's the one that surprised us most outside of sneakers. In Nike's broader footwear lineup, one shoe, the React X Rejuvenate, a recovery-focused model, drove sales growth of 5,811% year over year. Nike didn't disappear from the resale conversation. It just found growth somewhere completely different from Jordan's, and the legacy brands didn't actually lose their spot. Here's a twist. For the third straight year, Nike, Jordan, Adidas, New Balance, and Asics are still StockX's best-selling sneaker brands by total volume. Nike and Jordan specifically are showing early signs of recovery, with average resale prices up 5 and 6% year over year. Asterisk, they're not the fastest growing anymore, but they never actually lost the top spot. This is really the whole story. Fastest growing and best selling are two different rankings, and the crash narrative mostly comes from confusing them. Nike and Jordan are still on top by volume. They're just not where the excitement is anymore. That shifted to Mizuno, Mihara Yasuhiro, Saucony, Salomon, and UGG. The money didn't leave the sneaker market. It just stopped being only about Jordans. What we know, StockX's own report states Nike heads into 2026 with what they call renewed momentum, citing a strong Jordan brand, and notably, a more disciplined release strategy for core Jordan silhouettes, which lines up with what we said a couple episodes back about a packed calendar diluting individual premiums. What we think as an informed read, if that discipline holds, Jordan resale could stabilize further through the year. StockX itself is also predicting a boost from the 2026 World Cup for soccer-inspired styles. None of this is a guarantee. It's where the data and the company's own stated strategy point right now. If you remember 3 things, the deflation on legacy hype pairs like the lost and found one is real, not exaggerated. The growth in this market right now is concentrated in Mizuno, Mihara Yasuhiro, Saucony, Salomon, and UGG, not where most sneaker content is still looking. And Nike and Jordan haven't been dethroned by volume, they've just stopped being the growth story. So, crashed or just rotated? Based on the data, we'd call it a rotation, not a collapse. Not financial advice, just what StockX's own numbers show as of this month. Subscribe for next week's report. We're doing Nike versus ASECS. Next, a direct look at exactly this shift. Track real resale data yourself at SneakPriceapp.com. See you next week.